Yo, traders, what's going on, guys? I know that's a big title, right? And you're probably like, yo, Cleveland, better come with the juice. I got you, all right? Just give me a second. Hope you guys are having a good day. I'm just staring over here at this Euro GBP trade. So I'm going to put up some screenshots. I called out a break of that gray zone there and actually took profit at the 38.2 when I wanted to take profit at the 50. So I left out probably about an extra 1,500 bucks on the table. It's all good. I had a lot of volatility come in. There was the ECB conference, and it just freaked me out. This thing whipped up and down 50 pips, but it did end up going back in my direction. But that's the game. They wash you out, right? It's all good. But make sure you guys get in that live room. Just go to motivefx.com, and you'll shoot you right over to the live room. There's a free course there that where you get access, all right? So, guys, I want to paint you guys a picture real quick, okay? And it's all about this business model, okay? Now, a lot of people assume that profitability is this journey where it's going to take months and months of hard work and dedication and potentially years, and then eventually you'll become profitable. Now, the thing is, you could look at it that way, but if you really think about it, profitability comes and goes. There may be a day where you didn't make any money, and there may be a day where you did. So technically, if you did make money that day, are you a profitable trader? So you have to ask yourself, if profitability is all about decision making, and if profitability is all about really honestly sustaining and being in the business long term, then profitability has nothing to do with small incremental losses. I think profitability has to do more with those larger losses. You could be in the business for 4 years, 5 years, and if you blow your entire fund, you blow your entire portfolio, technically you're not even really a trader anymore. I mean, you're not going to be in the business much longer, or you're not going to get too many more clientele if you're doing some kind of capital management thing. Or even if you're managing your own money. I mean, the psychological damage that comes with losing heaps and heaps and large sums of your capital is very, very hard to come out of. All right, it's called capitulation. Okay, so if you really think about it, being profitable and maintaining profitability and staying consistently profitable is all about decision making. And some days, yes, you can't avoid it. Some days you have losers, but if you make the right decision and you avoid situations where you blow your entire portfolio, then you're just going to stay alive in the business. So if you think about it, if I give you an example and put you in a scenario where there are only 4 types of trades, which there are, there's only 4 types of trades. There's big losers, there's small losers, there's big winners, and then there's small winners. Anybody that is sufficient in capital management does not have a big loser. You guys, when you're blowing your portfolio and just always just losing large sums and large percentages of your capital, those are bad decisions. If you put yourself in a position and you put yourself in a mindset and you allow yourself to develop a discipline of not sustaining substantial losses and only having 3 types of trades in your portfolio, small losers, small winners, and big winners, how do you not immediately see some kind of profitability or at least break even? Now, there is a case to be made where there's the death by 1,000 cuts, right? I mean, you're just getting stopped out, 10 pip stops, and they're really tight, and it's just stopped out, stopped out, stopped out, stopped out. That is a case to be made, but at the end of the day, what you'll come to in terms of a conclusion is, hey, that's a methodical issue, all right? That's a situation where I'm doing something wrong in terms of my methodology, in terms of my strategy. At least you can see that. But the thing is, when you're losing so much of your money, what happens? You put yourself in a position where you can't even gather enough data as to know what's going on with your strategy. Refining a strategy and developing a really good strategy is all about data. You have to have large amounts of trades, a huge sample size, all right? I mean, trading is very statistical, right? So if trading is very statistical, the more data you have, the more you're going to be able to refine your trading system. But you guys aren't even giving yourself enough data because you're taking such substantial losses. Now, you kind of have to ask yourself, and you can go deeper into this and say, okay, well, what is a substantial loss, and how much should I be risking per position? And how do I avoid death by 1,000 cuts? Definitely, that's the questions you should start asking. But at least you put yourself in a position where you can start formulating a business model and formulating a plan that allows you to sustain. So like I'm here at my I work at a firm down here in Atlanta, Georgia, and we coin ourselves as capital managers. All right, we don't really coin ourselves as traders. We trade our capital, but at the end of the day, we manage our capital. Okay, and my business model and my business only exists if I make money. The thing about you guys or anybody that coins themselves as a trader is the mindset. Traders are so worried about being right. Traders are so worried about developing a perfect trading strategy that's 80% or 90%. and you know, having great risk reward ratios and all these types of things. When at the end of the day, that's not what keeps you alive in a business. I don't care how good your risk reward ratio is. I don't care how how great of a percentage you have. It's not holy grail. It's not 90%, and it's probably not any 80%. All right. So at the end of the day, all that stuff technically doesn't mean you're going to be able to make money. The only thing that means you're going to be able to make money is how you're managing the loss. Period. Okay, so stop having such a trader mindset where you're trying to figure out exactly where to get in by using your fibs and your stochastics and your moving averages and your Heikin-Ashi candlesticks, and start developing a mindset of, hey, I'm a capital manager. I'm a professional money manager that doesn't like losses. I hate losses. I fucking hate losses. All right, so my business model completely revolves around small losses. Okay, I'll tolerate a loss. I'll tolerate 50 losses, but they're going to be this big. But guess what? I give myself to have my winners to be this big. Okay? And so I think you can see, and I think you can rationalize, okay, well, if I don't have those substantial losses, and I only have losers that are this big, winners that are this big, and winners that are this big, then at the end of the day, my equity curve is going to look like this. You're going to have small loser, big, small winner, small loser, small winner, small loser, boom, big winner. Now you're sitting up here. And it's going to be really hard unless you just really blow your account with some stupid loss or have a really, really bad string of losers to get you back down to where you started. Okay? So again, death by 1,000 cuts is really the only thing that you actually have to worry about after you develop a methodology and a mindset of sustaining capital, preservation of capital. Okay? And then that death by 1,000 cuts is a methodical issue. You can fix that by doing a little bit more research in terms of how to actually make money and how to create a strategy and a system that is revolved around what the market actually does. Okay? You can't have 5 pip stops, 2 pip stops because you want to. All right, you have to be rational with what the market actually is capable of, and you create your business model around that. All right, so that's about it, guys. I think instant profitability is something that is real, and I think it all has to do with how you carry yourself in the business. Okay, so have 3 types of trades, avoid that 4th, and then I think you can see yourself actually being able to make some money. All right, so guys, your profit's always a motive. Make sure you get inside that live room. Just go to motivefx.com, get in a rookie course, and it'll route you right through. Have a good day. Peace.